Welcome to Talk Tickers, where we dig into the earnings calls that are moving the market. And boy, did Cloudflare's Q3 report move the market. We're diving into their results, and let me tell you, this wasn't just a beat, this was a statement. So, let's get right to the headline number. Revenue came in at $562 million. But here's the kicker. That's a 31% year-over-year growth. And get this, it's the second straight quarter they've actually accelerated that growth. That's some serious momentum. It wasn't just about growth, the profitability was there too. Non-GAAP earnings per share hit 27 cents. Now, Wall Street was only expecting 23 cents, so they blew right past that. This combo, fast growth and better than expected profits, that's exactly the sweet spot investors are looking for. So what did the market think? Well, it absolutely loved it. The stock just soared, jumping nearly 14% the next day. The options market was only pricing in about a 10% move, so it completely blew past those expectations. That's a huge vote of confidence right there. So yeah, just to be crystal clear, this was way more than just a simple beat and raise quarter. This was a statement. Cloudflare basically just told the market that any worries about a slowdown, well, you can forget about them. Okay, so how did they pull this off? What was the secret sauce behind this acceleration? Well, it really all starts with how much business they have locked in for the future. This chart shows remaining performance obligations, or RPO. Now just think of RPO as the total value of all the contracts they've signed but haven't billed for yet. It's a fantastic indicator of future revenue. And look at this. Total RPO exploded up by a massive 43% year over year. That's the fastest it's grown since 2022. It tells you their sales pipeline is absolutely humming. And who's driving all this new business? It's the big fish, the major enterprise clients. Cloudflare added a record number of customers spending $1 million and even $5 million a year. And because of that, these huge customers now make up a whopping 73% of their total revenue. That is a clear sign that their strategy to go after the big enterprise accounts is really working. Now here's what's so crucial. All this incredible growth didn't mean they had to sacrifice profits, not at all. Their operating margin expanded to over 15%, and they generated a really strong $75 million in free cash flow. But maybe the most important number on here is the dollar-based net retention, which ticked up to 119%. And that makes perfect sense, right? They're landing these huge new customers, and those same customers are turning around and spending even more money with them over time. It's a beautiful thing to see. Okay, now let's put this all into perspective. Look at how Cloudflare has been performing compared to the broader cloud sector ETF. It's not even close. While the rest of the industry has been kind of sluggish, Cloudflare has just been on a tear, delivering triple-digit returns over the past year. They're not just doing well, they are lapping the field. All right, let's zoom out a bit from the numbers and look at the big picture. What's the long-term story management is telling us? Because this quarter wasn't just a win on the spreadsheet, it was about validating their entire vision for the future. On the earnings call, CEO Matthew Prince put it pretty bluntly. He said, "We're building the rails for the next decade of internet growth." He sees Cloudflare as the absolute foundation for where the web is heading next. And that future, in his eyes, is being driven by two massive trends. And here they are, the two key pillars of their strategy. On one hand, you have security. They're going after the enterprise security market, trying to replace all those clunky old solutions with their modern SASE and Zero-Trust platform. And on the other hand, you have AI. They are positioning themselves as the go-to platform for making sure all the new AI applications are fast and secure. It's a really smart, powerful, two-pronged attack. Talk is cheap, right? But management is putting their money where their mouth is. They backed up this whole strategy by significantly raising their guidance for the full year. They're now projecting more revenue and higher earnings per share. That's them telling investors, hey, this momentum we're seeing, it's real and it's here to stay. You know, usually when a top executive leaves, it can make investors a little nervous, but even a big leadership change, the head of product, CJ Desai, is leaving to be a CEO somewhere else, was spun as a positive. Management basically framed it as proof that Cloudflare is such a great company, it's becoming a training ground for future industry leaders. A pretty confident take, you got to admit. So you've got accelerating growth, a powerful story about AI and security, and management that's clearly executing. What does it all mean for the stock from here? All right, let's get to our call. Based on everything we've seen, the killer execution, that accelerating bookings growth, and their perfect positioning for the future of security in AI, we are assigning an outperform rating with a price target of $275. We think this story has legs.
But what if you're an investor who thinks there's even more upside here? What's a more aggressive way to play this? Well, let's walk through a more tactical idea for those who are really bullish.
Given all this strong fundamental momentum, a bull call spread using options for January 2026 looks pretty interesting. The idea is you buy the $270 call, but you also sell the $300 call against it. What this does is it lets you bet on the stock continuing to climb, but it caps your upfront cost and clearly defines your maximum risk and reward. It's a way to capture that upside while being smart about your capital. So, to wrap it all up, Cloudflare's Q3 wasn't just a good quarter, it feels like a real turning point. They're proving they're a clear leader in this new era of the internet. And just as a final reminder, this is not financial advice. You should always do your own research and make investment decisions based on your own personal situation.